It's all about important cues for tomorrow. Indian markets now have moved from strength to strength. On a day when global support was missing, Nifty has managed to close at a 3-month high above 5300 as all-round buying in key sectors like banking and infra names triggered another fresh leg of buying. Banking stocks, they led the rally. The Bank Nifty was up another 1%. Retail stocks across the board, they were on a tear today on hopes of FDI and retail. All major sectors today have managed to close in the green. IDFC was one of the biggest gainer on the Nifty, and Lanco was once again the top traded counter on both the exchanges. So Indian markets are now up not only 4 days in a row. Today India was one of the best performing regional market as well. But what's the way forward for Indian markets from these levels? Nifty has firmly closed above 5300. So what is the next port of call? And with each passing day now, the market breadth also seems to be catching up. To discuss market technicals, we have Ashwini Gujral for you, and to throw more light on market fundamentals, it's Amrish Palika. Ashwini, Amrish, gentlemen, good evening to you. Thank you for joining us. Ashwini, you go first with a word on market technicals. We've closed above 5300. What is the next port of call now?
Well, as far as I am concerned, we have taken substantial profits off, because now I would like to hear some of the hopes getting translated into action before we go in for a further rally. If not that, then I need to wait for a dip before I re-enter positions, at least on the indices. Decent money has been made in the last, you could say, a couple of weeks, and that money should be taken off 5240, 5250. That's a level till where a small dip or a small correction could take this market. So either we enter there, or we wait for more sideways action before we try to enter this market, because today a lot of breakouts happened on the mid cap stocks, and they kind of failed and did not show follow through. Pantaloon went as high as 204, finally just closed 1.5 rupees higher than where it opened. So at higher levels, momentum is missing. Today's breakout, if you can call it that, was a pretty lame breakout. It wasn't one with gusto and volume. So I think probably markets will take a breather from here, and some profit booking could be visible. The next leg has to be led by action. Enough, I think, hope has been built in. So 5350 to about 5400 is a place where you could see profit booking come in.
Amrish, what is your assessment? Do you think the best part of the rally is now behind us and low-hanging fruits have been plucked?
Not really, because I have been bullish on this markets since the last 4 weeks. And in fact, if you remember, I had turned bullish on the markets when you're launching your channel in the beginning of 2009. So after 3 years, I've again turned bullish. So this could just be the beginning. And my belief is that the reform process, the policy measures, I think should start flowing in, because the government doesn't really have much of a choice but to flow that out. And based on those hopes, we have seen the market move up till where we are right now. Possibly we can move to levels of about 5400, but to cross those, I think we need to see some action at the ground level, which should hopefully happen in the next 2 to 4 weeks. But yes, as a caution, there could be a slip between the cup and the lip. So at these levels, I think one should go a bit slow, maybe book partial profits. But in case we see that flow happening, I think this is just the beginning. We could, in fact, see the markets at much higher levels.
Amrish, you're hedging yourself. You're bullish, yet you are advising your clients and our viewers to book profits.
I'm not saying book out completely. I'm saying if you have bought at lower levels, book out to a certain extent, because always it's better to be in cash to a certain extent, because in case there's a delay in flow, flow of the reforms, yes, you will have some correction. Like we've been seeing some amount of consolidation in the last few days. We are seeing some profit booking at higher levels. But then once the flows happen, I think you'll clearly look at 5200, 5300 as very cheap levels, because in that case I'll not be surprised that by the end of this year we are able to cross the earlier highs which you have seen of that 6500 plus.
Ashwini, let's look at banks. The index was up 1%. If banking stocks are holding on, do you think the underlying momentum will remain strong?
See, I have booked my bank Nifty positions, and if somebody had gone long around 9,000, 9,200, you are 1,600 points away from those lows. So it's not, a new trend. It's a fairly mature uptrend that we are sitting on. So yeah, maybe 100, 150 points you can always argue about. But broadly, Bank Nifty is also getting to levels where resistance often comes in, and from here, any kind of upside, you should try to take profits even on banking stocks. While I'm not saying anybody should go short, but this government is low on credibility. So, I would like to see credibility before we jump on to this big reforms bandwagon. So, given that, just the FM has been changed, I think 5,400 is good enough for that kind of news.
Amrish, what do you make of today's price action in retail stocks? Because that was the buzz, that was the talking point, and that was the hope trade for the day.
No, in fact, if you see across the domestic investors, basically the HNIs and some of the speculators, have been quite active in the last couple of days, because mid-caps is one space which has actually given you decent returns. A couple of stocks have actually given you that 10-20% returns in just a few days. So it is quite natural that when you're not making money elsewhere, possibly in commodities, you return back to equities, which is giving you money right now.
Amrish, do you think the consumer discretionary trade, the consumer staple trade, which has been a very resilient trade this entire year, is now coming under threat, and it is also reversing?
Yeah, it is reversing because we have clearly seen a slackness in consumer demand, which I think will continue for a while longer. And clearly there is margin pressure. And anyway, these have been the darlings of the market. So, they are bound to correct, especially when you have the other stocks moving up.
Ashwini, how much weight would you put behind today's movement in ICICI Bank? In last 2 or 3 days, ICICI Bank has traveled quite a bit, and again, it's a heavyweight.
See, if the Bank Nifty moves, large banks will move. So, nothing unusual about that. But again, ICICI Bank, the low was about 770. It's already at probably 920. So again, getting to levels where resistances are fairly close by 920, 943, and even 960. So, a string of resistances are here. And again, sideways move at least should be expected before a further rally. In case it's able to get past this 950 sort of zone, then, we are looking at much, much higher levels, which could be even closer to probably 1,000. But given the extent of the rally, I think it's a bit late to get into even ICICI Bank.
Ashwini, so when you say that you expect markets to really, move in a range, what kind of range do you think we could be staring at?
Well, on the downside, 5180, 5200, that is the ultimate support which this market should not violate if it has to remain in some kind of an uptrend. On the upside, 5400 to 5420 will not get violated unless you see some solid reform. So I would think till the presidential election, it's quite likely that the market remains in a probably 200-point range, because it will be very silly of the market to run to 5600, then get disappointed and fall to 5000. I think probably in the last 2 years, the market has become wiser than that.
And I guess one should also recognize the fact that in the month of June, and at least in the early part of July, we've seen a global flavor of risk on trade. So it's not only India, it's emerging markets, it is crude, metals, to a large extent, some other basic high beta assets also have made a comeback. So it's not really an India-specific phenomenon. In the month of May, there was too much of global risk, and that global risk now seems to be subsiding. Historically, every time when global risk has subsided, money has moved out of US dollar, it has moved out of German bonds or Swiss franc, and normally when a reversal happens, commodities, metals and emerging market equities, they tend to outperform. So what we've seen so far is nothing more than a very strong global adjustment. Amrish, would you agree with my assessment?
Yeah, surely. I mean, that's the way things move. But the question is, how long more, and what could be the possible domestic factors which can, continue this rally? And that's what we've been talking of. The reforms and policy measures, and the hopes are extremely high that Dr. Manmohan Singh will be able to roll them out soon. So I think we need to keep our ears and eyes close to the ground and see as to whether the final rollout happens or not. But if it doesn't happen, then I suppose we are doomed. I think this is the last 4 to 8 week window which we have for him to roll that out.
So where are you putting your money to work, Amrish?
In fact, we had invested across most of the large cap stocks in the capital goods, infra and the banking names, and they have given us extremely good returns in the past couple of weeks. And like I said, we are booking partial profits because in case that slip between the lip and the cup happens, then we should have some cash in hand to buy at lower levels.
Ashwini, what will qualify as something which you would like to buy on a decline? What is your buy on decline list?
Well, on declines, you would like to look at banking stocks, particularly State Bank of India, or stocks which have made new highs like HDFC Bank. Some of the consumption stories which have held up, like Bata or Jubilant. Larsen & Toubro is one stock. Maruti, which is now beginning to show a breakout. But as you said, buy them only on a decline, and if 5180, 5200 by any stretch of imagination starts getting violated, then that all the story is probably over. So buy around 5250 and then have a 50-70 point stop, so that your risk reward is enough. If you buy at 5350, what is your upside? 100 points. What is your downside risk? 300 points. So that if you look at it this way, there is no risk reward at this point.